All right, traders, welcome back. This is the SPY Insider Leak, all right? The market moves to watch, okay? Fear creates opportunity. This is Coach UV, all right? The unique trading group where strategy meets mindset and discipline turns into income. And you're here because you're serious about leveling up. I know that's why you're here, right? You want to level up, you want to stay up to date, and today we're going to be diving deep into the CFTC Commitment of Traders report. That's right, the COT report that I've been mentioning week after week, month after month, right? The hidden money flows and what the banks and hedgers are really doing behind the charts. But more importantly, we're going to talk about how you can use that knowledge to protect your capital, build your consistency, and step into the mindset of a professional. This is serious, guys. So take this serious and take your notes. If you're ready to trade with purpose instead of panic, do me a favor, smash that like button, subscribe, and hit the bell, because this is where traders stop guessing and start understanding. All right. So we're going to get into the message and the meat of this video. We're going to talk about earnings, SPY, where we are, these moves in the market, and where is the market headed, right? Where is the market headed? And why we've been seeing these wild swings and market rallies. This is the one you want to stick around for, right? Got a juicy video for you. So we're going to get right into that information right after this break. All right, guys, listen. Now we're inside of Stock Talk, right here inside of my Discord. There were some things that I wanted to show you as we segue into the charts that are very important. Okay, accuracy, receipts, okay, and momentum. And we had some of that over the week, right? A couple days before the market rally, 2 or 3 days. All right, we've been preparing. I've been preparing the group, all right, thus far, and we got those manifestations come Friday, the CPI, right? CPI came in cooler than expected, and we got that pop. Now, have you ever noticed how markets can rip higher when every headline screams fear? Have you guys noticed that? Have you noticed? Because I have, all right? I've noticed that whenever the market rips higher, it's usually right after there's a big fear-mongering campaign, right? All your biggest YouTubers, right, the gurus, CNBC, Fox News, whoever, right? There's some sort of bad fear-mongering news right before the market rips, okay? The banks, the commercials are hedgers, all right? They're not speculators, okay? So let's remember that we're talking about the banks. Now, right in front of you, I posted this 3:04 p.m. on the 23rd. Today's the 25th, Saturday. So that means this had to be Thursday, correct? All right. And on the Webull community, Webull is a brokerage account. A lot of folks use it. It's very popular around the retail community, and they've been around for a while. They have perks. I think it's easier to use than some other brokerage accounts, and it's user friendly, right? I love the interface. So I have followers on Webull. So this is inside of my Discord, but this post comes from Webull. I want you guys to keep up to understand what's happening. All right. And I post sometimes for guidance. All right. I call it live market update ideas. And so I like to do these throughout the day because traders need their handheld sometimes, a mentor and a coach that's there for them to explain price action. That's just what I do. I'm a momentum trader. I study the charts, and I'm really good at technical analysis. And so I spot opportunities out with instinct and experience and edge, okay? And so I posted here, all right, 3:04 p.m. The money is made when you don't trade with fear. All right, this is a trend day. So we had a trend day on SPY, all right? And I said that fear brings opportunity. 675 is possible and 700 is inevitable, all right? Now that's very important, okay? That's very important. Why is that? Because these numbers are gonna make sense when we get to the chart, all right? All right. I also posted another message minutes after that. Prepare to take out bears and squeeze the market along with it at 672.26. A very precise number. And you have folks, betting based on my vote count here, right? And they vote. And at that time, all right, this was the 23rd, the 24th. This was yesterday. All right. We were at 671. Okay. So I prepared them the day before it actually happened. And then we got into the actual price action, okay? And I end up making a 3, 400%. All right, right in front of you, I posted it. All right, just based on the guidance. Okay, I just want you to see that alone. All right, now the next thing I want you guys to think about. Okay, now we told you that the COT report has been released. Okay, now last week on the SPY Inside Elite video, I let you guys know that the banks were cutting longs and that they're reducing shorts. All right, they cut both longs and shorts. They're taking off protection. They're dumping risk. All right, sorry, they're taking off protection. They're not dumping the risk. Okay, so that move creates thin liquidity. With what you see here on a SPY chart, it creates thin liquidity. All right, volume profiles, range expansions, wild swings, a lot of emotional trading going on here, a lot of FOMO. Okay, that's what you see here on the chart. Now we're going to focus on timing and precision. Okay, so these opportunities, right? These pockets, right? The fact that the banks are reducing, they're reducing the longs, reducing the shorts, right? This moves creates thin liquidity, which means every buy order hits harder and every short cover becomes fuel. All right, that's how short squeezes and run-ups form. It's not bullish sentiment, it's a vacuum of hedging. All right, it's a vacuum of hedging. Now, if you never heard that term before, it's okay. All right, this is your first time being introduced to it, it's all right. But this is a form of a vacuum of hedging. So when they stop fighting the market can breathe and fly, okay? And that's what you see, all right? That's why SPY, Bitcoin, and Tesla pushed even while banks were reducing exposure, all right? They weren't selling out, they were resetting the board, okay? Which brings me to an interesting set point, okay? The COT leak, right? You got to read the tape. Now, let's dive into that. All right, now I want you guys to see here the fear and greed index, right? Remember the theme of this message, right? Fear creates opportunity, all right? What are the market movers, all right? What is driving the price action specifically for the broader market, SPY and the NASDAQ? Now, right now, all right, the commercials have flattened. And the COT report, all right, is a cheat sheet, okay? The COT report is a cheat sheet. Right now we have fear, right? All right, when others are fearful, be greedy. And when others are greedy, be fearful. All right, I don't use that term loosely. It comes from Warren Buffett, a billionaire investor. And so I see these opportunities and I spot them out. All right, now we're going to visit the CFTC website. I want you guys to actually see the website where I get the data from, all right? I won't dive into the actual data. That's for my community, the Discord community. But this is the website that I travel to see the COT report, the commitment of traders. Legally by law, they have to, right? The big banks, important hedgers, commercial banks, non-commercials, they have to report what they're doing. So, all right, with this, you don't need a chart to see who's moving the market. All right, it's called Smart Money. And this is the website in front of you. Now, I'm going to talk to you a little bit about this website and about what I see before we move on. All right. The commercials have flattened, all right? The funds are light on longs and the retail is confused right now. That's exactly when volatility expands because liquidity shrinks. So what's the move? Don't chase the noise, but study the behavior, okay? When the open interest in contracts and price holds or rises, it's a sign of compression. Let me say that again. Don't chase the noise, study the chart behavior. When open price, right, the opening interest contracts and price holds are rising, right? Like demand levels are holding, prices breaching certain levels, all right? That's when you want to hold, okay? And we're going to go over to the chart. Remember the CFTC, cftc.gov is the website, all right? And we're back on SPY chart on the 1 hour, okay? Now remember, all right, I like to use bigger time frames for my directional bias, right? So let's go to the daily and just say, hey, the daily time frame right now, we are in a bullish direction, right? Bullish momentum. We can clearly see that in front of us. We don't have to guess, right? We can clearly see that we are in a bullish uptrend, right? But I want to go down to the downtrend, right? The smaller time frame, right? To see that trend for the micro. This is the macro, the bigger bias, right? For my filter of direction. I go down to smaller ones, the 1 hour, 30 minute, the 15 and 5 to find my optimal entries, okay? And that's the point. All right, now let me take this off of my screen. All right, now the whole point of this, okay, can't seem to get that off, but the whole point of this concept of the higher time frame and the smaller time frame is for you to understand that we want to have our directional filter. We want to know where the market is headed so we get context. All right. And so if you want context, you have to do it this way. So we're going to take this off. All right. Now we have the hour time frame back in front of us. Now I mentioned when the open interest contracts and the price holds and they're rising, they're holding, it's a sign of compression. All right. You can see that in front of you and I'll explain that to you. It's a sign of compression. Now, you don't know when it snaps, but you do know that it's loading up. You do know that it's loading up, and you can spot it on the chart, and I'll show you what I mean. That's when you prepare your levels. You tighten your risk, and then you let the market come to you, all right? Remember, fear creates opportunity, all right? This is the practical mindset. Let's talk about application, because this is where traders separate from crowds, all right? You take a trade, all right? Right here in front of you, all right? $500. Let's say you want to risk $500. Okay, it works. All right, you bank $250. So let's say you decided to, let's say we had these demand levels here. Okay, we have these demand levels. All right, why is it a demand level? Because price has bounced here before. Demand meaning that buyers and sellers are agreeing on price here. Okay, so price can flow back. It can breathe now. Right, it happened here. Okay, it happened there. Okay, it happened here. Happened there, okay? And so somebody noticed price fell, all right? They waited for price to come back to them, right? All right? None of this theoretically has happened yet. We're going to start right here, okay? None of that has happened. Let's say that none of this has happened yet. Okay? This hasn't happened. So we're going to move this out of the way, right? Move it over, right? Okay? And somebody's waiting for price to fall back down because someone took profit from this double bottom. And so once price hits here, okay, and creates what you call here a lower high, all right, a lower high, a technical term that lets you know that the bulls are exhausted and they're taking some of their profit, and so we fall back down to retest. Now let's say that you were the trader who was waiting for price to retest these lows, right? Because you knew that price is resetting from folks who were early buyers and taking their profit. All right. Now, if you know anything about lower highs and lower lows and higher lows and higher highs, then you can see clearly that right here was a higher low that got created. OK. All right. In this little triangle pendant. All right. So this price got bought up right there. Why? Because it's close to a demand zone and created a higher low. Study that. All right. This is a technical setup, okay, and recognizing technical setups, all right, technical analysis, simple trading terms you learn when you first started trading, uptrends, downtrends, higher lows, lower highs, all right. These are simple things that still work that people misunderstand. So back to the example, you take a trade right here, you spend $500, it works, you bank $250 as it moves. Clean trade. You take your profit, right? And you're thinking, if I just double this, I can make $500. Now, right there, right here is where this happens at. Human psychology and human behavior. With the example I just showed you, since we started working our way here to explain the concept, somebody buys here, okay? All right. Fear creates opportunity. This is the practical mindset. Now, right here is when somebody thinks, man, they start getting greedy. I want to get back in. If I could just do this, I can make another 500 today. All right. That moment right there is where most accounts die. You're no longer trading the setup. You're trading the emotion. All right. The professionals ask, do I want to risk my profits or protect them? If you made $250 right here, don't risk the whole thing on the next trade. Risk 10 to 20% of that. Win on a high probability setup only. That's how you build consistency in trading. You don't blow accounts because you're wrong. You blow them because you refuse to accept you're wrong. Every pro knows how to cut fast and move on. Let me say that again. Every pro trader knows how to cut fast and move on. Fear isn't your enemy. It's a signal. It tells you when you're over leveraged, over trading, or over attached. And when you learn to listen to that voice in your head, fear becomes your filter for discipline. Okay. Now, before I move on to any more mindset things, right, I want you to realize this. Right here is that moment where somebody wants to say, hey, I want to make more. Okay. And they get into the market and they risk all of their money. And what does price do? It falls back down. A trading error. These red candles are a consequence of a trading error. Why is it a trading error? Because remember, our directional filter is the hour, guys. Remember, the daily time frame is bullish. We're going up. It's the directional filter is up. It's our bias. And so we know where buyers are trying to go. And so we buy the dip, understanding the environment that we're in. And right when somebody chased and made that trading error, they spent too much money, they get right down here, and it falls back to the same parallel hidden channel at this higher low here, at the lower high. So right here, the lower high happens and there's another buy opportunity. This is the moment where you're supposed to buy, to risk a small amount of the money that you just made, all right? To go back, to take out these highs, to retest and make higher highs, okay? That's what I want you to understand, all right? Go back and rewind this. If you didn't catch it, rewind it. Watch this video a couple of times and it will make sense to you, okay? Now, this is why I wrote the book, The Power of Patience. Letting things come to you, all right? Very important, all right? That's why I named this group the Unique Trading Group, guys. We are very unique in the approach. The market is very unique, all right? Getting in position, letting the market come to you, focusing on the process and not the profits is very important, all right? That's how strategy meets mindset and discipline turns into income. That's why I wrote The Power of Patience. The book is for the community, for the person who wants to learn. It's 100 pages and it's built for option traders and traders, whether you're a beginner or intermediate, okay? Patience isn't doing nothing, right? It's doing the right thing at the right time. When you win, your first job is to protect your capital, period. When you lose, your first job is to analyze, not revenge trade. Excuse me, guys. It's a coffee talking inside of me. So like I said, when you lose, your first job is to analyze, not revenge trade. Okay, you're supposed to say, what did I do wrong? Journal it, right? Study what your actions were and try to build from that. All right. Patience is how you stretch your career beyond one good week of luck, right? That's how you do that. Patience is how you do that. All right. And my book down below in the description, it teaches you how to control what you can control: risk, emotion, and execution. That's how you start thinking like a fund and not a follower. All right. Remember that it's always process over profits, a trader's framework. Now, let's talk about this process, okay? All right. Now, I told you guys it's going to be a very interesting video. I want you to understand what we're dealing with here. Now, we're going to break this down to a 15-minute time frame. All right. Now, the SPY is in a really, really good state. All right. We still have positive RSI. We have a positive RSI. Now, who's to say that we won't pull back? We could possibly pull back like we always do. I always mention this. Okay, we got to pull back here after we ran higher, came back to a obvious demand zone. We talked about that. Okay, we could get the same scenario again, guys. All right, don't be surprised. We can get the same scenario here below the 21. Look at the probability of price below the 21 EMA. ATM sound. Once it gets below location, overly drawn, get in a position. Here's another one below. All right, so you get these moves and they're actually there. You get these moves and you see these moves. All right, so it is in front of you. All right, but I want you to think about this. All right, here's a framework that I teach. Plan the trade. Before you click, you know your entry, your stop, and your target. All right, same scenario I gave you before. All right, knowing your entry, all right, all right, where your stop is below where you enter that. All right, not so much of an obvious stop, right, but a demand spot, right, a little bit below there, maybe here. All right, and if you was to do that at your optimal entry, right, at the demand higher low, parallel yellow channel right here, remember that, right, then that means you didn't get stopped out had you put your stop below here. All right, your stop will be there, your entry is here, and where's your target? All right, your target will be breaking over, right, breaking over this overhead resistance. All right, you entered into the 21. Remember that the bulls want to try to retest these highs. Now, we didn't quite get there, but when you see price consolidating, you can make your decision, the same decision making, and spot out human behavior where somebody's chasing and they made profit. You see that? You want to take your profit, okay? We're starting to curl. We're no longer uptrending. We're choppy, so you can make a decision to get out of there, okay? Retesting, right, the same high here. That's what we went to. You can use this one or that one, but know your levels, okay? Can you guys see that? Please tell me you can see that, all right? Defining your trading plan, your entry, your stop, and your exit, okay? All right, we talk about this a lot. Rewind the video if you need to see that, okay? Now, journal your trade. Record what you saw, what you felt, and why you took it. Review the trade, all right? What what was your system, or was it an impost that won? All right, you want to know that. Was it your system, or was it your impost that won? You need to understand that. All right, you do that for 30 days. For anybody listening, yes, you listening, you do that for 30 days and you'll see patterns in your behavior before you see them in the chart. I'm telling you, that's the difference between pros and amateurs. Screen time. Take this as a business and study. All right, the pros treat each trade as data, not drama. Okay, you got to take this more serious. Your process is what pays you when the market changes. Okay, so the setup, let's talk about the setup. All right, now enough of the mindset stuff. Now we are here on SPY. Let's go to the weekly chart. Okay, the weekly chart. If you guys have been enjoying this video so far, do me a favor, smash that like button, guys. Get this video over to somebody who needs to see it before the market opens on Monday, because what I got for you guys is very interesting. It's very juicy. This is what you need to know next week before you jump into any trades. All right, now this is a COT report. All right, the SPY Insider League. Fear creates opportunity in the market movers. Where are they? So SPY is extended here. We have a continued rally on that cool CPI. Right, this is a weekly time frame. Now let's take everything off of the charts. All right, we have about, let's say, a week left within this month. So I will be putting out the November trading signal. All right, your levels to watch, but right now we have a quarterly time frame, which you can't see here now, but the quarterly time frame and the higher time frames are saying higher for longer. Could we get some macro events to push price down? Yes. All right, it's already happened before, so I would not be surprised, but right now I don't want to fight the trend. We are higher. Okay, we are breaching weekly highs. Okay, we breached the weekly high on SPY. That high was 670.23. We are apparently above that. Okay, so we have price opening above and closing above previous closes and high ranges. That means bullish momentum. Okay, and so like I said, the institutions, they've cut exposure, but price has held firm, guys. Price are still holding firm. That's a sign of hidden strength. Watch these areas. Now let's go back to the daily. I want you to watch these areas. Okay, now SPY closed at I want to say 676. That could be the proper, let's see here, 677.25. all right, 677.25. This is where SPY closed at. All right, 677.25. And right here on the daily, you can see that we are still above the 21. As long as we are still above the 21, we're still bullish. All right, you see this range here. All right, now we have a breakout pullback in motion. Okay, a breakout pullback in motion. Why is that? Because this was a range top and we broke out from there. All right, where's that range top at? All right, that high is 673.95. all right, 673.95. So you can expect, all right, a movement back to 673.75. And I want you to see that more so on the hour time frame. Okay, 673.75. okay, right here. Now that number that I just put up here, that green line that I just put there, all right, that's the number. We're gonna make it purple real quick so you can see the difference between my other green line. All right, this is the purple line that I got from the daily. All right, what we can retrace back to. And so you want to watch for this move here. You want to watch for price to break out like it already done. All right, and possibly retrace the 21 EMA zone right here. Right, breakout, pullback. Okay, the same thing that happened here, guys. Okay, breakout, pullback, create a higher low. It's really not that hard. Need to pay attention to these because it happens all the time. Now the volume profile is saying absolutely we could go even further down to 671. Now I'm preparing you guys before this happens. All right, does this have to happen Monday to open? No, I'm giving you a scenario. All right, where would you look for this trade at? Okay, you wouldn't just hop into a put, right? You don't do that, because once you hop into a trade prematurely without confirmation, all right, it can stack against you and the market goes in the opposite direction. Right, this is a self-feedback loop when it comes to the market. Okay, it's human behavior, personal development, a mirror, a spitting mirror image of you, your reflection of who you are when you click the buttons. Guys, remember, when you're trading, the computer can only do what you tell it to do. It can't move without you clicking those buttons. Remember that. All right, and so in order for you to see some downside continuation on SPY, for us to fill these gaps for a more optimal buy, if you didn't get that move and you don't want to chase, we have to break below the previous close. I just told you the previous close on SPY was 677.25. All right, that's the number that I'm looking for next week to do calls. I'm sorry, to do puts, to trade the market towards the downside. That's what I'm looking for. The previous close of last week on Friday. If I can see clear weakness and we maybe get a breakout, right? Like we got a breakout pullback from this zone up and pull back. We could have a breakdown pull back, right? Or breakout, pullback. And right here at that moment is where I want to try to short it. If we don't create, and we create fail rotation back to the upside, we fail rotation and we create this lower high overhead resistance, and I want to short the market back down here. Those are the scenarios. Don't chase, okay? And I want to look to maybe try to buy or see what happens at 671 at the point of control, because if we fail here, we could also retest these lows to fill in this gap just to come back to 665 and 664, which would give us a $10 range, okay? Guys, remember, this stuff is important, and remember that I told you that. However, SPY is trying to get to 700 and 680, and so these are the targets. We are still higher. Next week we have earnings. We got earnings coming up, and so you want to be careful about what's going on with SPY. All right. We also have ZS. I wanted to throw ZS on your radar. Also ASST. I'm hopped into some calls. I will be providing these stop loss and the risk assessment and the trade alerts for you guys that are watching. It's a part of the Discord. Been kind of busy over the week, but I'm going to get those posted before Monday for you. But here we have ZS, okay? You want to watch for CrowdStrike earnings next week. They're going to have earnings, and so this probably will follow it, but I do like the setup here on ZS. Keep it on your radar. Right now, on the smaller time frame, we are making a low lows here, all right? Have a micro bearishness right now. Tesla is strength on the higher time frames, as you can see. I'll just show you the monthly time frame. This isn't a bearish chart, but don't ever chase, guys. Don't ever chase. Don't ever chase. Always have a trading plan and let your higher time frames be your bias filter. Okay. There's some targets of $506 on Tesla. This is a bull flag, so be careful shorting Tesla unless it scalps. That's what I would suggest. I think you guys would understand that depending on what you trade, because there's a lot of actual momentum going on and a lot of wild swings, all right? Bitcoin has flat, retailers hesitant, right? XRP creeping back in. But I do see a rally in crypto. I mentioned that gold may be peaking, all right? Gold may be peaking. All right. And I want to let you guys see some commentary. All right. I want to let you guys see some commentary before we close it out. From Tom Lee, just to see where we are and where we are heading. All right. Again, remember what we talked about for SPY and these numbers. Okay, we're higher. 680 is trying to be the target, but however, we are extended and we have a gap below us, so we can fill that gap next week. We have earnings. Earnings is volatile. All right, and we have more data. All right, so I want to segue over to Tom Lee. Let you guys hear some commentary. And before we get over to the end of the video and finish it out, all right? Here you go, guys. Thank you for listening.
Strats, Tom Lee. Tom, happy Friday. So we're up more than 15% year to date for the S&P, probably more than you expected in late spring. At the same time, we had this government shutdown, tariff headaches. So why should investors be more bullish on risk assets, the market overall, than they were 6 months ago?
Well, John, even at the April lows, just to be clear, our S&P year-end target was 6,600. So we were still expecting explosive recovery in markets. But we are above that level. And, we're 10 weeks before the end of the year and the S&P is at 6,800. I think it's still a base case then for people to say that in just a typical year, the S&P should gain another 4%. That would put us over 7,000 into the end of the year. And I think that that's sort of the minimum. But because we've got the Fed cutting, and they started in September, they've been on pause all year. That only happened twice in the last 50 years, which is 1998 and 2024. I actually think the S&P, given the skepticism that's been plaguing this market all year, we could do far better than 4%, maybe even 10% into year end.
Wow. Okay, so where does crypto fit in, especially when you're looking at how those currencies are moving versus what's happening with tariff concerns, global trade concerns, et cetera?
Crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with U.S. and China on tariffs and trade. And that was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later that are plaguing the crypto market. But I think we're almost through that, because a measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive. So I think you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral.
Yeah, I was actually going to get your thoughts on that, Tom. But in light of that, and you and I have had these conversations over the months, over the years. I can think about the conversation we had in early August, where you talked about on the exchange, where you talked about the fact that cryptocurrencies tend to be early indicators of where stocks are directionally headed, as well as indicators of liquidity in the broader market. So given what we are seeing in Bitcoin, and as that relates to the S&P 500, and arguably what we're seeing in Ethereum, and what that says about the Russell 2000, I want to get your thoughts.
Yeah, I think it's sending a pretty bullish signal. Part of it is it's a counterfactual statement, but crypto had the biggest liquidation event, deleveraging event in history. The number is probably multiples of what happened during FTX, and Bitcoin ends up down 3 or 4%. So I think it shows you that Bitcoin itself is proving to be a pretty good store of value, because if we had seen this happen with gold in the gold market, if there was a huge deleveraging event and gold was only down a few percentage points, we'd of course consider that a real validation. And it's also true of Ethereum, because Ethereum is seeing so much activity growth. On the L1 and the L2, because of stable coins, and it's not reflected in the price. It does take time. So to me, because like what I'd call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move into end of the year as well.
Do you think we're seeing a rotation out of gold, given the fact that it just moved so quickly to record highs, into some of these cryptocurrencies?
Now, I don't follow gold as closely, but I did talk to Mark Newton, our head of technical strategy, and he does think that there was what he called a cup and handle pattern earlier this year, and then the targeted move was right around where gold is peaking now. So he does think we might be seeing a short-term peak in gold. That's kind of good news for almost everything else, because gold was sucking the oxygen out of equities and out of crypto. So a gold cooling is probably bullish for both stocks and for Bitcoin and Ethereum.
Wow, you guys hear that? You hear that, okay? Now, I hope you guys enjoyed that. I want to quickly get you over to my Discord, all right? This is inside the day trading alerts. You guys like receipts, all right? Who are these people behind these YouTube channels, their voices giving you information? How can you trust them? Well, here's some of the proof of the accuracy and the mindset. I've been trading for 10 years, okay? And so that's what you get joining a group if you're new, beginner, or advanced, okay? I have a strategy and a community for you of like-minded individuals. I have trading alerts. I have a published book for guys. I have videos weekly on YouTube, all right? But inside the Discord is where we dive in deep. It's insights, it's quick, it's live with me, right? And so on the 17th, I put out a trade alert, all right? You see the stop loss here. You see the entry for the support, right? You see the targets, right? And we are close to that breakout target, right? That I posted on 10/17. So just based on a 10/17 post, entry at 660, 663.40. All right. You see that, right? You see the target 671, 673. Okay. On the 17th. Now let's go over to the SPY chart and see how accurate that was. Since that call out to enter into calls, all right, on the 17th, here we have SPY right here, all right, it opened up at 663.52, okay, and ever since that day, that call out, right, that same day, the next day, all right, we got to a high of 665 on that day, which is a $2 move, right? But that day trade turned into a swing trade, and we end up going higher for longer. We've been going up ever since, just off of my call out right here at the 21. Remember, ATM sound. Right above the 21, ATM sound. Right above the 21, ATM sound. See the high probability trades above the 21, catching that lower high bounce to pull back, waiting for the pullback. Okay, waiting for the pullback. All right, you can catch breakout trades, but are you chasing? Are you chasing it is what I want you guys to see. Okay, now listen, trading is more than psychology. All right, it's more it's more psychology than it is pattern. I'll say that. All right, it's more psychology than it is pattern. And this is what's is important to understand that it is okay, because a lot of people get caught up in call outs. A lot of people get caught up in emotional trading. What's your purpose of trading, right? Is it an arbitrary belief, self-sabotaging beliefs, trying to pay your bills when you don't really have money or you don't have a job? It's a lot of nuances that make trading hard. Human behavior on a chart, all right? The more intense it is, the more intense the moves are. All right, but like I said, trading is more psychological than it is patterns. All right, you can study every indicator on the planet, guys. Listen to me. You can study every indicator on the planet, but if you can't control your ego, you will lose to someone who can. Think like Neo in the Matrix, right? You see through the code. When the market drops and your heart starts racing, ask yourself, are they moving price or moving me? That's the difference between reacting and responding. All right. Once you detach, well, you have to learn this skill, but you have to learn to manage your emotions. You have to learn to detach emotions from execution. You don't need to force trades. You let them come to you. How do you learn to detach emotions? By having a solid trading plan that you stick to based on your edge. Take that serious and not with a grain of salt. This is a switch in mindset that can allow you to see clearly when you're trading. All right. So I want to wrap this guys up, guys. Here's the playbook heading into Monday. All right. The banks cutting hedges equals more room to run towards the upside. Wait for pullbacks. Liquidity is thin and volatility spikes are possible. This is very possible. So you get big swings and good. This is one of the greatest moments I've ever traded. I've been doing it for 10 years and I'm telling you, these are one of the best markets to trade. All right. What else? QE talk. What is QE? Quantitative easing by the Feds. This equals fuel for speculation. So don't fear the moves. Study them, guys. Don't chase these profits. Protect them. All right. Fear creates opportunity only for those who are prepared. You got to be prepared. So if you didn't get anything from this video and you didn't remember, or you need to go back and review, please do that. Go review some of the charts that I gave out. Review my other videos. All right. Understand what I'm saying, because that is what's happening. All right. Banks are letting go of loans and reducing their shorts. All right. They're no longer hedging. These cause feedback loops. All right. It causes fuel. All right. So if this episode brought you any value, do me a favor, smash the like button and subscribe. Hit that bell so you're ready before the bell. You understand? If you're ready to master the mental game, grab your copy of the Power of Paytience down below. All right. It's time to trade smarter, longer, and stronger. Now, before I cut away, I want to show you real quickly. All right. This is a snapshot of what I provided the community. All right. In the Unique Outlook 2025. Why squeezes happen when bank cut hedges. Take a moment to review this. All right. Fuel, hedging, liquidity thin. All right. The banks are hedging. That's not directional. OK. They're cutting longs and shorts. Fewer hedges, all right? Thin open interest, less resistance, faster moves, dealers cover, gamma fuel. Gamma is like a fuel for an airplane. A plane cannot leave without fuel, jet fuel, right? So a stock price can't move without gamma. Study this, all right? I'll do a deep dive on this in another video. If you want, leave me a comment below and I will do that, all right? And QE talks add jet fuel, all right? Quantitative easing. That's what you guys need to understand, all right? Hope that helped. I'm Coach UV, and this has been the SPY Insider Leak. Market movers to watch, all right? Fear creates opportunity. Stay disciplined, stay dangerous, and I'll see you guys before the open. Until the next time, guys, peace.